Good day, all. Hope you are all doing well. Hope you all had a lovely weekend. Here it is Tuesday. Markets liked what they saw early yesterday. Had a pretty decent run during the day. Wasn't overwhelming in my opinion, but it's nice to see tech lead. The Russell also did quite well yesterday. I think a lot of that was positioning ahead of what's going to happen tomorrow. And I think we're starting to see a little bit of those jitters that I anticipated we might see starting to happen today. And I don't know that we're going to see much of anything towards the close, though we could. I believe that there are nervous investors out there who are worried about the hearings tomorrow, where the CEOs of Apple, Amazon, Facebook, and Google face probably, I'm going to be polite about it, an angry and uptight House subcommittee on antitrust. And I think they're going to be far-ranging in their questions. And I think they're going to try to publicly pillory the CEOs. A lot of it is going to be on privacy issue. A lot of it is going to be on the influence that the likes of Facebook has on voters and on opinions and on a lot of things. So it's going to be pretty interesting. We're going to see also, I think, what some of the House members think about these companies vis-a-vis their size. And they're frankly gigantic and only going to get bigger. Nothing is going to stop that, save antitrust, shall we say, crusade against them. At some point, it may be coming. I'm a bit surprised that we haven't heard more saber rattling on that front, but be that as it may, tomorrow may be the day. So we're a little bit, we're going to be glued to our seats to see what we can see there. And I think probably everybody else will too. We also have earnings, obviously. Facebook moved their earnings from Wednesday to Thursday. So Thursday, we got everybody's earnings coming out. It's going to be, I think, one of the craziest earnings days that I can remember, maybe ever. So a lot could happen this week with the market. And that's why I believe we're watching. I'm trying to zero in on my screen here. Make sure we keep a tight eye on all of the metrics. But I think we're going to see a little bit of perhaps nervous trading prior to tomorrow, during tomorrow, and certainly prior to earnings on Thursday. And of course, as earnings come out, market trust is going to try and digest. Investors are going to try and digest what it is that they're seeing from these companies and what it is they're seeing in terms of the numbers based on what they're going to have heard on Wednesday in terms of the House subcommittee hearing. And so to me, this is a very important week, one of the most important weeks, certainly of the year. Could it be a turning point for stocks? It actually could be a turning point for stocks. And we've seen the fluttering for 2 weeks now in tech. They've all held up. We're going to take a look at the big names graphically and see what they look like. But when you have that kind of, shall we say, just mixed feelings about this run possibly being over based on the fact that these hearings could mean something going into the election. We know there's going to be posturing, and it's going to start tomorrow, and then there's earnings. And the two combined could give investors a reason to maybe take some profits off the table. Then we'll find out if that happens. And I'm not saying it will. In fact, I wrote this morning or yesterday in yesterday's Capwood forecast piece for the week that if I was a betting man, and I am, I would bet that the earnings are going to be strong enough where investors are going to say, forget what the House says, forget what the Senate might do, forget what the president or anybody's going to do. These companies are a force on their own. They spend a tremendous amount of money on lobbying. Google spent a record amount last quarter on lobbying. Facebook spent a record amount and actually more than Google. So they're spending a lot of money in Washington to appease Washingtonians, I was going to say. And we'll see how effective that is. We know it's not going to be the House isn't going to be easy on them because it's a public forum. So the real question is, underlying all that, what strength do they have in Washington, given their lobbying efforts, given their money, given their the funds for reelection that they slather these politicians with right, left, and center. So we don't know. But I believe that it's possible, not probable, but possible, that this week, if we see a jittery market, if we see tech falter, and we don't see money then going into some of the, shall we say, rotation type names, the rally may have run its course for a little while. Then at that point, it's a question of whether it stays up or whether it consolidates and or drifts down. But we've got a lot of interesting things going on this week. And of course, we have the Federal Reserve meeting today and talking tomorrow, press conference wise, about what they are talking about behind closed doors. So we'll find out about that. I am on my way to do a Charles Payne show, Making Money with Charles Payne, and I got some producer notes from the producer as to what Charles wants to touch on today. And one of the questions he was asking me about is, hey, what do I think about inflation? And do I think that Chairman Powell is going to make any comments tomorrow on inflation prospects? My reply will be on television today if I'm asked that. It will be, he better not say anything, because if he says the wrong thing on inflation, and by the wrong thing, if he sounds nervous, is worried about percolating inflation somewhere, anywhere, which I don't think he's going to say, he dare not say, then if he does make that mistake, he could kill the bond market and the equity market. So he's not going to do that. He's just not built that way, because that's not his job, and he knows what his job is. So is inflation a problem? Not yet. Is it going to be? Yes, it is. Not a lot of people are really talking about it. Not a lot of people are sure what's going to happen with it. But by my metrics, it's not only percolating, it's perhaps on the verge of our doorsteps. We're going to start to see it over the next couple of quarters. We're going to see it even more so into next year. If we get past this virus, if people are smart and wear masks and social distance, and we start to knock this thing down and, God willing, knock it out, maybe with a vaccine, then great. We'll start to get into the other side of this recession, and we could get there quickly. At that time, if we get there, let's hope that we do, and I think our best chances to get there will be the first quarter of next year. And then a lot of things will look different, because we'll have, who knows, in the White House, what kind of administration, we don't know. What kind of agenda for Congress, we don't know. What kind of agenda will they set for themselves, we don't know. Tremendous unknowns. But just as far as the pandemic goes, if we get to the other side of that in a great way, in a positive way, then I think we're going to start to see a very meaningful onslaught of inflation numbers in lots of different areas. And two principal reasons for this are, number one, what's different this time? And the reason we never got inflation from 2009 on, given all the stimulus, given everything that happened, and mostly that stimulus was certainly quantitative easing ×4 and all those liquidity pipelines that the Fed provided. That money went to the banks, okay? It didn't get circulated in the economy. There wasn't the type of velocity of money that we saw in the 70s, for those of you who were around in the 70s, and certainly the early 80s. And in the 70s, when we had the stagflation, and the early 80s when it was being killed by Paul Volcker. So we didn't have that because the money got parked at banks. The financial crisis was about finance. It was about the banks. It was about a lot of financial institutions blowing up. It was about our financial system imploding. So what needed to be repaired first and foremost were the banks. Okay, that's what happened. So the money didn't circulate throughout the economy. The money went to the banks to save the banks, to build up their capital, to make them profit again, so we can move forward and grow economically, because then the banks and the capital markets would have the ability to lend and capitalize growth. So that's what happened. This time, the money's gone into the banks, certainly the lifelines, liquidity lines, but it's also gone into corporate bonds. It's gone into all people's pockets. We're going to get another round of that. So we're going to see more stimulus, which it's definitely coming, whatever shape it takes, it's coming. And it won't be the last of it either. Believe me, if the Democrats move forward boldly through the rest of the summer and certainly into September, October with new plans for more stimulus for individuals, I will guarantee you we're going to start to see some impactful inflation in the first quarter of next year. And I think that's what's going to happen. At the same time, we're likely to see that because the velocity of money is increasing already. And the monetary supply, the monetary base has increased the last 2 quarters at rates that no one's ever seen an increase at before. Just staggering increases in the monetary base. And this money's not being parked at banks. This money is getting spread around, and there's more of it coming. Another, at least $1 trillion. So Democrats want $3 trillion. Republicans are at $1 trillion. Let's say that they compromise at 1.5 or $2 trillion. The Democrats are going to push for more because Nancy Pelosi called this pathetic, I believe was her description of what the Republicans were offering in terms of stimulus. So we're going to see more money. All right, it's political season to the nth degree. So that money is going to move around. There's going to be tremendous volatility. That volatility is going to increase. That's going to put pressure on prices of goods and services. Into that, there are fewer goods and services because companies have ratcheted back on production for all the reasons. So more money, chasing fewer goods, inflation. So if Chairman Powell, if there are any comments or questions on inflation, he answers them and trips himself up on that, then this could be a brutal week for markets. Brutal. Again, I'm a betting man. I'm not betting that he's stupid. I'm certainly not going to bet against him. And I'm not going to bet against the tech stocks. Just want you to be aware that anything can happen this week. That this could be a breaking point if things go wrong. So got a couple questions and then go take a look at some stocks and see what I'm going to address with a few folks. Ruby, are you trying to stop or slow the spread? Have not understood from the beginning. Are trying to stop and slow the spread. I'm not sure. I think if you mean the spread of coronavirus, yes, I'm doing my part to stop. Yeah, I wear a mask always when I go out. I social distance when I go out. If I'm walking down the street, I generally keep my distance from people, and I'm not out that much. If I eat out, it's outside at a restaurant, and I see a lot of people are very, shall we say, polite and considerate because it's about me. If I have it, which I don't, thank goodness, not giving it to them. If they have it or have even antibodies or something, because they don't even maybe know, it's about them wearing a mask, so I don't get it, so you don't get it. So this is what we should be doing in social distancing. And so that's what I'm doing to help the spread as best I can. A lot of people are. There are certainly some that aren't. I was in a restaurant yesterday, went in to pick up some food, and the bar was empty, and I stood at the bar. I know the owner, and was chatting him up. He had a mask on. I had a mask on. He bought me a beer, took my mask off, got the beer. He went around to go and help somebody with something. Some young people who were having dinner, 4 of them, come to the bar and sit right next to me. There's nobody else at the bar. They come and sit right next to me and order shots of tequila. No masks. They had them in their hands, but they didn't have them on. Sat literally right next to me. I don't understand that. I wanted to say something, but I didn't. I moved to the other end of the bar, finished my beer and left. But so a little scary. People aren't considerate, but we need to have more of that. Sergio, morning, Shah. SLV shot up pretty quickly. Yes. Do you think it can keep going or we'll see a pullback? Yeah, I think it can keep going, but it doesn't mean we won't see a pullback. The same thing with gold. Nothing goes up, well, they obviously everything can go up parabolically, but not forever. And gold certainly, we've talked about gold here for some time now. And I have maintained that I like gold, and frankly, we own gold in one of our portfolios. We own GLD and physical gold. I have, yeah, I have. I've got to believe that the run on gold can continue, because what happens now, and same is true for silver, and silver. The reason that silver and silver's graph is a lot sloppier than gold, but it doesn't mean. At first, I didn't like it. I didn't like the way silver was acting, but it's come around, and I think it's going to continue to follow gold. And as silver looks cheaper, on a dollar for dollar basis, we're talking about people saying, well, I can buy silver, I can buy more silver and get a bigger run out of that. It doesn't, some people think that way. They don't recognize it's about the percentage gains, but that's fine. And at $22.86, I'm looking at SLV now. Yeah, it's got higher to go. It does. There are some gaps in there, which I don't like, because the run has been so quick, so steep, so parabolic, and has left lots of gaps. Silver worries me. So gold doesn't have the same profile as far as the ascent. It has been steadier, and it's got a little bit of a gap up around 180 in terms of GLD, but can gold go higher? Yes. Here's what I'll say about that. For all of you who have had a really great run up with gold and or silver, at some point it doesn't hurt to take profits, and you can always get back in. Use your gut. I use my gut. You can't mechanically, analytically figure this stuff out all the time. You can be really good. You can be consistent even, but you certainly can't do it all the time. What works best all the time for me and for you is use your own gut, use your instinct. If you're a little nervous, you think it's gold has had a bit of enough of a run, or it looks like it's a little weak, or things you hear. This is like this Malcolm McGadwell blink thing. We all have this ability. And if for those of you who are trading stocks, who are investing stocks, who've been doing it for a while, have a pretty decent handle on what it is that you're doing, you may not think you do, but you do, because this is what you're thinking about. Your gut is also telling you stuff. Listen to it. So if you think, okay, I got a lot of money on the table here and I got a really nice profit, then take some of your profits off the table. Okay. It doesn't hurt. You can always get back in higher. That being said, I think gold has more of a run to go, because you heard what I said about inflation. I think it's coming, and I think gold is considered this store of value vis-a-vis inflation. So we know that's happening. We know that central banks aren't going to stop stimulus packages. We know that fiscally there's going to be more stimulus, not just the United States, but globally. So all of that, the money printing, the potential for inflation, the store of value, the impact that inflation would have on bonds, which would be negative, would certainly bode well for gold. So yeah, can gold go higher? Absolutely, go a lot higher. But if you see something happening, I think what would knock gold and silver down right now would be something really negative happening to the stock market. In other words, let's just say this week ends up being a bad week for tech stocks, and we see a tech sell-off, and that leads to a market-wide sell-off. What would happen to gold and silver probably then is you would have across the board selling. All right, there's a lot of folks are in the market, a lot of new investors and new traders. Whether what we always talk about the Robinhood crowd, which I just like to. I'm not disparaging them. I love the Robinhood crowd, and they're same at E-Trade, Ameritrade. All of them. That doesn't matter. A lot of folks now chasing stocks, chasing tech stocks, chasing cruise lines, airlines, chasing gold and silver. So they are going to take profits. All right. And some of them who got in late don't want to sit on any kind of loss. They're going to sell. And then some of them, we don't know how much margin they're using. If they start to get margin calls on all the stuff, if a lot of stuff, if we get in a blanket correlation across the board of selling, then gold and silver are going to take a hit. They're not going to be a store of value for whatever period of time that the market has the jitters and we see selling. So that would be the time to take profits. The minute you think you see that happening, then you take your profits, look for a spot to get back in when things calm down, and they will. So that's my opinion on gold and silver. Barring something like that happening, yes, they can continue to go higher. Right now, the whole lot of nothing going on. The Nasdaq down a little more than 0.5%. S&P saw the upside today and then turned back down. But and the reason that the S&P is doing better right now is the dollar continues to weaken among other currencies, and so what we're seeing there is expectation that S&P 500 company earnings will be better. Maybe not this quarter because of it, but yes, we've had enough of a dollar decline that this quarter should show some improvement. And the reason there will be improvement this quarter and next quarter in terms of S&P companies is those companies who make money overseas, when they translate the money, the revenue and profit that they make overseas back into US dollars, the money that they make overseas, that currency now can buy more US dollars. So they translate it, just an accounting, that's all it is an accounting differentiation between what you make it here, and we talk about everything in dollars here. So let's translate the earnings you made over there into dollars so we can tell the people, the stockholders, how we did. Well, when you translate that into dollars, that currency buys more dollars, those earnings look better. So that's why the S&P has been a little bit, has shown more resilience lately than, say, the tech stocks. So tech stocks, again, hanging in. Tomorrow is going to be the first day. Today into the close, we could see some early positioning, but I haven't seen any kind of panic. 2 weeks ago on that Monday when we saw that crazy day, that was panic. That was bizarre. That stays with me. When you see something like that happen, it can happen again. So one of the reasons, and there are a bunch of them, why I'm a little apprehensive about tech stocks in here. But again, they have been the bellwether, they have been the go-to, and that has not changed yet. It's just the setup for the change now seems out there, at least within earshot. Ruby, should we have a stop behind our gold and miners? Yes and no. The yes is to have a stop. The no is not a hard stop. The low, to me, I don't like putting stops down. I don't like putting stop orders down. I know we have to. I know you have to. I know you would go out, we do things, and we're not watching everything. This is your business, and you have a life, and you can't be watching. But when you put a stop down, and I will repeat this over and over and over because it's so critical, and so many people don't quite get it or they forget about it. Sorry. The high frequency trading desks see those orders. They actually see the orders that you're transmitting. Okay, and as they see those orders that you're transmitting, they will act on them. So in a momentary vacuum for a stock, and all stocks have them momentarily, they know, they being high frequency traders, know that there are these orders out there, these stop orders. So if a stock is, I don't care if it's 25, 50 cents, $1 away from a whole bunch of stops, and a lot of people, because they're following technical analysis, following a lot of the same measures and levels and support, then there are a lot of similarly placed stop orders. High frequency traders know where they are. If they can knock down a stock, your gold stock, your mining stock, any stock, because there's a lull, and even if they knock that stock down, let's say $1, okay, so what if they lose $1 because it's going to bounce back? If they short the stock, and let's just say they short the stock with, it takes them 10,000 shares on fast orders, trying to hit bids, basically knock the stock down $1 because they know it's that I'm going to make up a number. They know it at 50, there's a lot of stops where people just want to get out. Okay, so the stock's trading at 51. They can actually knock the stock down very easily to 50. The super liquid stocks, not so easily. But at times there are vacuums, and you can do that these days. So let's just say if one of your miners is at 51 and you put in a stop at 50. Now, it's very easy for them to knock that stock down to 50 to trigger all those, become market orders. And you and other people who have your orders there are all selling. Guess who's buying? the high frequency trading people that took it down there. They're going to try and buy all the stock that those stop orders allow them to buy. They're going to grab all that stock. So as you are selling, they're buying. And then you're going to notice that in a day or two, the stock's back up to 51 or more. And guess what? They own all those shares. Okay, that's how they play the game. So I don't like to put stops down. You have to, then do it. But I prefer a mental stop. I know where my levels are, and I want to get out there. I'm pretty good about getting out where I want to and close enough. So that's what I do. If you can do that, do it. If you can't, put your stops down. Give your stocks, and you have to know your stocks, how volatile they are. Are they capable of going out and hitting stops? Are the high frequency traders doing that to you? And if you watch a stock often enough, you'll see it happen. You can't miss it. You just don't know what it is. Now you'll be like, wait a second, was that what I thought it was? Yes, that's what you thought it was. So it's a dirty game. It should be illegal. It's not. But it happens, so be careful on your stops. If you got to put them down, take your profits. Okay, let's see what we got. Sergio, SLV, shut up, yes. Do you think it can keep going? Yes. Earl, what city was that bar story in? It was in Southampton, New York. Yeah, and they were just young kids. I mean, just nicely dressed, and they had been eating inside, and the tables were all socially distanced. I hadn't been to this restaurant in at least a year, and I was driving back from seeing a friend, and I thought, okay, I'm going to go in there and pick up some stuff because it's been too long, and yeah, just very nice young people, but kind of not paying attention or clueless or didn't care. I don't know. Anyway, so I moved. Okay, Peter, TSM pulls back 7.2% profit taking, still had good news today. Nervousness. Let's talk about it. A little bit of nervousness. We got by something like, I don't know, around 100, less than 100 days to the election. People are nervous about the upcoming election. People are nervous about tomorrow's House subcommittee hearing. They're nervous about tech's leadership. They're nervous about coronavirus spikes, not just the United States, but globally. Worried about a lot of things. So there's nervousness. The market has come so far so fast. There's some nervousness. So Taiwan Semi down 6.8% now. There's another example of a parabolic jump higher can result in a quick sell-off. Even on good news. Will the stock end the day back up? Possibly. But again, this is just where we are. This is exactly where we are right now. Yes, the easy money has been made. Yes. Now, and it's been for some time, a stock picker's market. It's ever more so now. And it's also a good time to, I mean, this is the tough part. There's so much momentum happening out there because of a lot of retail trading, because of a lot of institutions following the retail crowd. These stocks that catch a bid sometimes have some tremendous momentum, and you can see that in Taiwan Semiconductor. You can see that in gold and silver. You can see that in a lot of stocks. You can see that in some bankrupt names like Hertz when the Robinhood crowd jumps in, creates some more momentum. And that's going to continue. So the difficulty is riding the momentum and being confident enough to just ride what you can out of it, and also then be smart enough to just take what profit you can after you've had a good run, because those runs don't go forever. They can go up for quite some time and you can make a lot of money. But me, I'd rather take my money off the table and miss the next 10, 20% move. And then if I see the stock come down, I'm like, okay, so I could have had another 20, 30%. That's big. But if I've got money, rung the register, not worried about it. Don't want to be too greedy, because that's when accidents happen. Peter's asking, Wells Fargo had a super bad Q2. Yes, still long term. Yes, Peter, I still like long. This is, like I said, this is 3 years on this one, and yeah, I still like it. I mean, its stock's actually remarkably held up. Had a horrible second quarter, and it's the only bank out there that the Federal Reserve is preventing from growing. So that's obviously a problem for them. That's why I've said it's really about the management. If they had they have a new CFO. That's not enough. They need a new CEO, and it needs to be a headline name, somebody that everybody is going to look to and say, that's the leader. That's the person that should be running the bank. And in a perfect world, which obviously we don't live in, someone like Jamie Dimon, who's got this amazing track record of doing what he's done in his career, starting with Sandy Weil. So someone like that, it would never be him. He wouldn't, he would never go to Wells Fargo. But someone of that gravitas, that gravity, who's got that kind of weight in the industry, in business, and with Congress. And that would influence the Fed, and things would turn bright for Wells Fargo. And that's what's going to happen. Again, to me, it's sort of like the Steve Ballmer exiting and Satya Nadella coming in at Microsoft. That triggered Microsoft for me. That absolutely triggered Microsoft for me. That was just, I was waiting for that to happen. It took a lot longer than I thought, but when it did, good night. Talk about a rocket ride. And Nadella got in there in 2014, and by 2016, the stock was on the move. No looking back. So Wells Fargo, I think the right management, same thing. So absolutely, yes, long term. Is it going to be painful at times? Probably. Right now, if you're buying it down here, it's not painful because it's holding. It's holding. It's kind of, consolidation. Let's hope it's consolidating. It doesn't mean, and I don't, believe me, I think it has lower to go. I think we definitely was going to test the lows and probably break them. I'm going to buy more down there. It's a long-term hold for me. So absolutely call it a Hail Mary. But yeah, I'm still with it. Down with that for sure. All right, everybody, let's have a quick look at the tech stocks. We want to have a gander at those, and we're going to certainly look at them on Thursday. Thursday is going to be all about the tech stocks, and Friday too. So let's just have a quick go to the screens. Let's see. I got a good connection. I got bad connection. So right now I got a good connection. So thank goodness for that. All right, let me go to share the screen, and let's go to, we'll start off with the FANGs. And we'll see what we got. And then, of course, we'll look at the composite, because that's what we're looking at there. We're looking at, and the Nasdaq 100 is like 45% of the big tech stocks, 6 of them in there. So Facebook. By the way, the bar charts, technical stuff, you see strong buy, strong sell. You got to take that with a grain of salt, because that's all based on technicals. There's more to it than that. So every time if I flash up a screen or you're looking at bar charts, the technical setup is very interesting, but it is not the be all end all. Just giving you a heads up. There's a lot more to it than that. The way they calculate that is based on pure technicals. All right, so here's Facebook. I don't see anything really bad here, other than we've got this little support ledge here. And if Facebook comes down and challenges that, that's the kind of thing we're looking for. We're going to be looking at something like that. If we see something like that, do we come down here and fill some more holes? Could we easily, but again, that's not a big move from breaking this first minor support at, we'll call that 225, 227 range. Very easy to get down to 222 in, about half a second. And then you've got all this space down here, and we're below the 50-day. So believe me, traders are noticing that. It's not so much the 20-day, because of the way the stock has been trading, but the fact that we're below the 50-day now, people are going to get nervous. We're far and away from the 200-day. red line down here. But this is enough to give people pause. After a run like Facebook has had, that's a little worrisome. So far, no damage, no nothing sideways. Let's hope it's consolidation, and the stock could certainly go higher. Amazon, we got a similar picture there in terms of, okay, what tremendous ascent. You see this. This is just like a rocket ride, and just beautifully above 50-day, trading slightly today, intraday above the 20. Just picture perfect, just really nice, solid. Then you have this herring coming up tomorrow, and you have a lot of profits on the table. You have a tremendous amount of profits on the table since the beginning of the year. People understand that, and here's December. Okay, here's January right here. All right, here's the new year. Are you kidding me? A lot of money on the table. That money doesn't mean anything until you sell. All right. Yes, you're looking good and you're feeling good, but the money's not in your pocket. It's a paper gain. It's a market gain. Okay. Investors are looking at that and thinking, I don't want to lose that. It's an awful lot of money. So that's a little bit what I'm worried about. I don't this setup fine. I don't see any damage over here. We're just there's nothing there, nothing to get upset. Apple, another rocket ride. This one, on the other hand, pretty ugly action. That just doesn't look good. Technical traders look at that. And by the way, I'm sure these were stops. Would not surprise me as people were riding this up that they got nervous and put their stop somewhere down here. And then you see this, this bar down here, bam. That's probably just stops getting taken out. So that's why I say be careful of the stocks. I know if we got to the next day and that you looked at this at the open and at the lows of the day, you were happy if you got stopped out the day before. But then this is what happens. You can come right back up. Now, are we out of the woods with Apple? Nope. No, we're not. So we got earnings coming out. It's going to be really interesting. So Apple, so far, not looking too good. We're coming down. We dangerously approached the 50-day. We're not quite near it, but could we get there? Sure, in a couple of days, we could get close enough to it where investors might be worried about taking profits. Netflix, it's part of the FANGs. We're going to keep an eye on because all the right reasons. It's a go-to stock for a lot of people. It's certainly a coronavirus darling, and we like the other stocks. It's not in any danger right now. It looks just fine to me, but that doesn't mean things can't change. Try and create. Let's see if there's anything. I want to see if there's anything interesting anywhere here that we'd have to worry about, and not really. I'm looking to see if we're close to any breaking of any kind of trend line, and I would say probably not. So we've got something like that, and we're fine. Above the 50s, but yes, below the 20 today. Not a big deal. Netflix is not on anyone's radar this week. It will be if it gets hit like some of the other stocks, if that's what happens. But no one's watching Netflix because the earnings came out and the stock already paid the price. Same thing. I've got this sideways movement above that little sideways channel, and it was a nice pop when we got up above there, looking very good, looking very healthy, and stays above there. Google remains looking good, but we're going to see the earnings. We're going to see what kind of ad spend or lack of there was this quarter, and believe me, it was not a good quarter for ad spending. So we have a couple. So you see that we've broken down from that big move there. And we've got this move right here, and we're going to have to stay here. So Apple and Google are really going to be, Facebook's going to have troubles because people know that Facebook had, there's some boycotting of Facebook, and that's going to, people are aware of that, investors are aware of that, but they're really going to be listening to the ad spend on Facebook and moreover on Google. And that's going to be interesting. So there we go. We got some pretty nice movement there. So far, so good. And let's go look at Microsoft, even though they're not in the line of fire this week. Stock looks great. Continues to hold up, and we've still got this nice little rising here. We're above the 50, we're below the 20, but Microsoft's just doing its thing. So let's take a look at the market as a whole. And when we look at it through the prism of the Nasdaq Composite, okay, nothing bad. I don't see anything bad there. Does it mean we're going to see anything bad? No, it doesn't mean anything. It just means that we're just chugging along. So far, so good. And I don't know that anybody could fault what's happened so far to the NASDAQ. However you want to cut some of these lines, you could say, okay, we've broken out of something there. Does it bother some? No, not really. So far, so good. The composite is just still moving up, and it's been strong. It's had some fluttering, and that's a problem. If you look at the fluttering, you can see when you get moves like this, okay, this crazy move where we make a new high, okay, in the composite on this bar, we get to a high of 10,824, but we end the day at 10,390. That's scary. That's really scary. We'll talk about that Monday. That's the Monday I'm talking about. New high, and then just wiped out, close to on the lows of the day. Pretty frightening. Next day we opened even lower, went lower, managed to rally, and that gave investors hope. And we've kind of struggled a little bit here. And you got a couple of moves here based on earnings. Some good stuff comes out, and then can't really hold it. We have another kind of ugly day here where we open on this bar, we open close to where we closed, and then collapse, and we close close to the lows. So not just a little nervousness. I call it fluttering. So Nasdaq composite stocks, the Nasdaq itself seems to be fluttering a little bit. Is that bad? No, it is certainly a reason to be cautious. And let's just have a quick look at gold and silver. Look at the spider gold again, just kind of parabolic lately, and got this little gap in here. So that every time I see a gap, I get a little nervous that at some point it's going to get filled. Doesn't always. It's not 100%, but it's pretty darn close. It's usually a matter of time. Could be anywhere from a few days, weeks, or a month or two. So there's no time limit. There's no hard, fast rule. It depends on what caused the move and what may extinguish the move. And here, the move, we pretty much understand why gold is doing what it's doing. So far, so good. So this may be not to worry about it that much right now. But just again, pretty healthy. Absolutely. To me, this is all healthy. Then this gets a little stupid. Okay. Yeah. I don't like to see that. To me, that's Momo. That's the Momo crowd, the more momentum crowd, chasing it up, forcing it up, and just hoping that people come on behind them. And of course they do. And a lot of that is retail. Yes, a lot of it is retail. Nothing wrong with that. But the problem with retail is retail doesn't have staying power. Okay. Retail traders and investors will exit. They're not sitting on tons and tons of capital where these are long-term plays. These are momentum plays, smart momentum plays. And whether they precipitate that, whether they are the springboard against which other investors, including institutions, hop on board, doesn't matter. They're doing a great job. Gotta love it. you see it. You see a trend like this. This is note to all of us. We're going to start looking more for these kind of things on our live stream. Okay, we are going to start to look for more of these and anticipate that we get to a new high somewhere along it. We're going to anticipate, if depending on what the stock is, if it's the kind of stock, or gold is certainly the kind of ETF, the kind of stock, if you will, that people pay attention to. People are going to talk about it. That's when you're going to get momentum. So we're going to start looking. If you guys have anything you like at, let's take a look at it. Let's take a look at what the shape of the graph looks like. And is it a name? Is it a name that's got earnings coming up? Is it a name that's got, there's a story behind it. There's a narrative trade to it. And we look for stocks like that, and let's take a look at them, and we'll play them just like gold, just like a lot of these stocks that are going to catch Momo. And we could certainly have a lot of fun doing that. So I will present some of my ideas, and you guys have any you want to share with the group, love to hear it, and I'm sure everybody else would appreciate it too. So pretty much that's it on those. I'm going to see if you guys have any questions, and then going to wrap it today. Got to head over to the studio to do the Fox show with my dear friend Charles Payne, who's a great guy, by the way. I'm very fond of everyone over at Fox. The Fox, I've been a guest on Fox for more than 10 years on both Stuart Varney's show, Charles Payne's show. I've done lots of other stuff, whether it's Bloomberg or CNBC, or I do TD Ameritrade, I do Cheddar, I do a bunch of TV, and everybody's great. Everyone is so nice. But people ask me a lot, because I've been on Fox Business for so long, that, oh, well, what is he like? What was that person like? And I'll say this about that. He couldn't be two nicer people. Stuart Varney and Charles Payne, you'll never meet two nicer people. So just really great people. Just gentlemen and smart and fun, and really care about their audience. They want to help their audience understand the markets and make money. That's what they really like to do. So it's always a pleasure being on their show. A couple quick questions, and then I'm going to say my goodbyes. Joe is asking thoughts on Shop earnings play tomorrow. Shopify, yes. I go through my periods, Joe, where I play earnings and I don't. To me, I don't always play earnings. I have to be really comfortable with what I'm doing, because I know earnings are absolutely, you can just have a great day or two or three or more, or you can just get hammered. And that includes times where I have done extensive research analysis, and I'm really comfortable. I'm never really comfortable, but I'm comfortable enough to put a position on, obviously. And many times I've gotten just absolutely hammered on it. So earnings are tough. They're just very tough, and especially now when people are trying to gauge, what does it mean that the earnings have been better than expected? Does that mean that it's okay that the stock's going to go higher because earnings were so low? They didn't make much money, but they made more than was expected. Their earnings per share weren't good, but they were better than expected. They still, business was off 30-40%, but they beat expectations. So how long of a ride is the stock going to have on that? It can have a pop on earnings, or investors can look at it and say, no, it's the earnings 30% lower this quarter over a year ago. I don't want to own that right now. So it's tough. Shopify, I'm putting in that category right now. Looking at the chart, I wouldn't want to bet against it. The problem with betting both ways, by buying a spread, by buying a straddle, in other words, buying options, buying both call options and put options, and just hoping stock moves enough one way or another to make money. The option prices are expensive. They come down a little bit as the VIX has come down, but they are still expensive. And playing straddles right now, and I've looked at a whole bunch of them, it's hard to justify the move that you need in order to play a straddle effectively. So I say good luck with it. Let us know how you do on Thursday. Um, I'm looking at the chart, and I can't really tell you anything. If you probably know it a lot better than I do. You know the stock a lot better than I do. Um, There's money to be made there for sure. I can't imagine the earnings are going to come out and the stock's not going to have a move. I wish I knew which way it was, because if I did, I'd be playing it with you. So good luck with it. Let us know how you do, please. Good luck. Craig is asking, Shah, would you agree that mining shares are essentially acting like call options on the metals? The way some of them are acting, yes. And by the way, materials, metals, commodities, and we're going to start talking more about that towards the end of the summer. We're going to work into the ag cycle, and I'm going to start talking a lot more about agricultural products and ETFs, and we're going to start playing those. We're going to start talking about them here. But yeah, some of the mining stocks are acting like call options. Yeah, they are. And by the way, as expensive as some of the options are, some of the mining company options, you catch a mining company. I like some of the big miners. You're going to have to go a little further out, though, on the earnings expectations, and you're going to have to obviously go out further on the options. But some of them looking for plays out there for 6-9 months out on the options, and we're going to start looking 6-9 months out on a lot of different things going into the first quarter of next year, as I anticipate seeing some considerable pickup in inflation. But yeah, I agree. Sergio, what is your prediction on how the market will be at the end of the week? My gut says fireworks. Yeah, I think so. Fireworks are possible for sure. If we end up mildly today, and the major benchmarks end higher today or flat today, then that's a good sign that investors aren't that nervous. So though today isn't the day, if we see selling into the close today, then that's going to tell us that investors are nervous. And if they don't like what they hear in the hearings tomorrow, if they don't like what they hear from the Fed tomorrow, if they don't like the earnings are coming out on Thursday, yeah, this market could be vulnerable. But right now, it's not showing its hand. We're just looking backward at the last 2 weeks, and we know that there's been some fluttering, if you will. Okay, so that old saying, when a butterfly flaps its wings in Africa, it could cause a hurricane over here, or something like that, right? So, yeah, I've witnessed the fluttering. You have too, and so it's going to be, if nothing else, an interesting week. Could end up the week, absolutely nothing happens. A lot of up, a lot of down, a lot of flat. Nothing. Could be nothing. Or it could be like, okay, all the bad news is out and the market loves it and it just tears it up and goes higher. Or it could be, I didn't think we were here. I thought we were past this. A lot of profits on the table. Let's take them. Anybody's guess. So on that note, I'm going to wish you all a lovely day, and I'll catch you on Thursday. Cheers, everyone. Be safe out there.